Well, I hope that you guys all have some idea of what DeFi is. Otherwise, you are probably very lost since you're at a 0x conference. But for those who might be less familiar with it, really what we're talking about when we talk about DeFi is a system of applications that are built on blockchains. And those applications are designed to enable decentralized financial behaviors of various kinds. So one thing that's often mentioned is the idea of removing the need for third parties. But the way I think about it is more actually the idea of not needing permission from those third parties, because I certainly think there are a lot of new types of intermediaries and middlemen that are coming up in crypto, but they're just not the same degree of gatekeepers as you might see in the traditional financial system. Right now, I would say that DeFi is also arguably the main use case for crypto, frankly. It's the one area in which I think, well, with the possible exception of some games, but where we're starting to actually see product market fit. And in terms of thinking about how we might begin to measure that, I think we can start by looking at the total value of locked capital in the system. So, we started out 2019 with, a few $100 million, 274 more or less, of locked capital in the system. And by the end of the year, we had north of 650 million, which, as you can see from the graph behind me, is over 137% growth, which is certainly nothing to scoff at. I think even more interestingly, if we look at the ETH locked in DeFi, we started out with about 2 million ETH at the beginning of the year. And by the beginning of 2020, we were close to 3 million, which is over 50% growth for the year. Now, obviously 50% is great, but in terms of the DAI locked in the system, I think that's where we start to really see people using, obviously, Maker, but a lot of the other applications that are also in the DeFi system. So started out with about 3 million, just under $3 million of locked DAI, and ended the year with almost 10x growth at over 31 million. So in thinking about kind of why DeFi needs to exist, I think we really need to return to a lot of the inefficiencies of the current system and people who are underserved by the traditional financial system. Obviously, a lot of those people live in the developing world. And one of the early critiques that we saw of kind of crypto in serving the unbanked is really the fact that, okay, we're lacking a lot of infrastructure. But that's rapidly changing. So at this point, 2/3 of unbanked people across the world have access to mobile devices. And you can see on the chart in blue that more and more people across the world are using digital payments in one form or another. So it's obviously a very natural fit that they would be able to use digital currencies in this context. And the other thing to consider, aside from kind of where did the need for DeFi come from, is where it's happening. So, I mean, let's be honest, it's all happening on Ethereum. I think a lot of other networks are kind of trying to enable some of these decentralized applications to be built on their networks, but realistically, the vast majority of this is happening on the Ethereum network. And why is that? Well, I think it's for a few reasons. A, Ethereum remains kind of the only network that actually works. But aside from that, what we're starting to see is that there are ultimately components that are being combined in order to basically build these new kind of Lego financial systems. And that comes really down to the concept of composability, which I'll talk about a bit more. But what's happening on Ethereum is that rather than having to reinvent the wheel every time you're trying to build an application, you can plug into existing projects and begin to use those as part of your stack. But again, without having to require the permission of these networks. You can just plug in and start using them immediately. So in looking at some of the main use cases that we see in DeFi today, obviously lending and borrowing is one of the main ones. And within that universe, two projects that really stand out are Maker and Compound. Maker, I'm sure a lot of you are familiar with, enables you to basically take out what is effectively a self-loan using initially ETH, but since the switch to multi-collateral DAI, now other asset types as well, as collateral. And the system, I think, has demonstrated a really impressive degree of robustness over its existence, particularly considering that during 2018, when the value of ETH dropped by about 90%, as those of us who are investors were very sorry to see. But generally speaking, the DAI stablecoin was able to maintain its peg. And so that, I think, just gives a glimpse into the fact that these systems, although they're very new, can actually present a real financial alternative to what we might see in the traditional world. Compound, on the other hand, is a decentralized-ish money market system, which uses an algorithmic, basically regulation system, so that supply and demand are incentivized by using the interest rate as a lever. And that, again, I think is certainly reminiscent of what we would see in the traditional financial world, where interest rates are also used as a lever, but opens up this market to folks who might not have access to capital in traditional contexts. Now, on the exchange side, the idea of a decentralized exchange came about really as a result of many of the hacks that we saw going back as far as Mt. Gox, but unfortunately we've seen them time and time again over the years, even fairly recently, like with the Binance hack and so forth. So the idea was to enable peer-to-peer exchange and not have to trust a centralized intermediary with one's keys. Historically, a lot of these systems have been plagued by issues like low liquidity, challenges with scalability, issues with governance, but I think the progress we're seeing in these areas is really promising. I am probably the least qualified person on stage today to talk to you about 0x, so I'll leave that to the subject matter experts. But in general, I think that, for example, the 0x mesh liquidity network is a really powerful way to start connecting liquidity across the decentralized ecosystem. And eventually, I see this becoming a really viable alternative to centralized exchanges, not just for a narrow subset of use cases, but really across the board. Obviously, there are different models for decentralized exchanges, Uniswap being another, which uses kind of a automated market maker system to enable people to use a pooled model rather than having to trade directly on a one-on-one basis. It's better for some use cases, harder to use with others. Particularly large orders are sometimes subject to a lot of slippage. But generally speaking, Uniswap has seen a lot of very rapid growth, and I think is a great alternative model for the decentralized exchange world. One of the things that I think is most interesting about DeFi is the fact that you can really create assets with a degree of ease that leaves the rest of the financial system kind of speechless, I would say. Obviously, ERC20 tokens were, the ERC20 token standard was created to enable the creation of fungible tokens, and that's really what we saw across the ICO boom. Eventually, the ERC 721 standard emerged as a way of enabling tokens with unique properties, and obviously CryptoKitties, and generally speaking, in-game collectibles were kind of the first universe in which that standard really started to take off. But you can imagine over time we'll actually see a lot more diverse types of tokens or types of assets represented by 721 tokens. One of the standards that was announced more recently, I think it was formalized last summer, is the 1155 standard, which basically enables governance or action to be taken on a group of tokens. And so that can be useful in a few different contexts, but particularly in a universe in which one is trying to save on gas fees, for example. So rather than having to send all these individual transactions, you can basically group them. Or in a case in which you don't want to have to wait for individual block confirmations, and you can instead basically batch process. So I mentioned composability before, but I think it's worth returning to because ultimately it is, I think, one of the key distinguishing features of DeFi in general. one of the things that's fascinating to me about it is the speed with which innovation can happen. So InstaDApp was launched by a couple of hackers at a hackathon, a couple days of work, and they were able to get a basically functioning live product. And so that's not something that, bank innovation cycles in banks take literally years. And so the fact that you can get a couple smart folks together to build something like this is very unique to the space. Something like Zerion is literally, connecting a series of APIs and different projects and enabling less technical users access to all of the various applications in the DeFi ecosystem. And so I think a project like that is a really good gives a very good glimpse into where we may be headed, in the sense that obviously one of the main critiques of DeFi is still, well, you have to know what you're doing, blah, blah, blah. But in reality, I think the barriers to entry are continuing to come down, and that's really promising from a mainstream adoption perspective. So, in terms of issues, I've kind of talked about a few of these across the talk so far, but one of the main challenges has been connectivity between protocols, and we're starting to see some of those bridges being built. So again, those barriers are coming down. UX remains a challenge. I think a lot of teams with a design-centric mentality are starting to work on that. And by the way, I think one of the issues that's often not discussed in terms of design is not just what does it look like, but actually how does it work and how easy is it to get things up and running. And one thing I will commend the 0x team for is I think they have a very good onboarding experience and developer docs. At least give them a little +1 for that. In terms of the security and scalability, flexibility of smart contracts, all of that has certainly been a series of challenges for the space. But again, I think we're seeing kind of the proliferation of serious folks who take a look at smart contracts from a security perspective. And as there become more robust standards around that, I think that issue will start to diminish in terms of risk as well. In terms of what we've seen as advantages, obviously the DeFi ecosystem, I think so far, has been able to move around regulations a little bit. And I certainly think a lot of the more serious projects are obviously working hard to comply. But so far, I think having a bit of a gray area has in some ways benefited the projects. Obviously, I don't know that that will be the case forever, but I think the SEC is coming out with some interesting potential safe harbors, which I think hopefully could help bring some of the innovation that has started to go offshore back to the US. So that's kind of where I see the ecosystem today. I think I have like 1 minute, so if anyone has a question, happy to take that. All right, thanks.